Hello friends, welcome back to this exciting display of ES trading ecosystem. Here on the left side, we are going to use this chart of 65 minutes to guide us towards the bias and major endpoints of a trading day or a week, followed by reaching out to 29 minutes chart, followed by 15 minutes chart, and leading up to 2 minutes execution chart. On the left side, we have what we call as balance imbalance tool noted right here. This is giving us the direction where the imbalance has tilted towards, and we are trying to take the opposite side position because we believe that the restoration of balance to the mean is imminent. We also are tracking on the bottom section the contracts which are coming in rotation at certain levels. You see there are two skinny lines at the bottom. This is area of interest for going long. Now, if it is not just the moment you touch it, you blindly go long. You have to take a story to its final conclusion. The second part of this is once we qualify a certain trading levels, we are going to qualify them and see how the balance imbalance rotation is going on the 29-minute chart, followed by 15 minutes chart for real timing and pricing the market a little bit more filtered way, and then finally executing on the 2-minute chart. So on the left side, let's start with the 65-minute chart. We have also placed, now these tools are part of level 1 and level 2 coaching stack, as they are 369 L2 or L1. Now we have done all the work behind the scenes, so you are focusing on the execution stack, not the analysis stack, because that can be really delivered pretty quickly. So what we also have is what we see here called mandala levels. When the market is, let's say, open here on Sunday and market is rotating, we are looking at the first impulse move and its termination point. And the first impulse move at this point is this bar. Right here. Market is going sideways, saw a big impulse move, the top is broken. Where are we going to terminate? And we see by placing mandala level right here, and this is the zone of interest. And another pattern which comes, and now at the same point we have the balance imbalance. Now if you look at 30 minutes chart, all right. We are on the energy level, which is kind of a very strong level because we have 1, 2, and 3 all at the same level. Let me mark for convenience. So we are at that level, and we also want to check if there is a probability of a smackdown. And you see here we look at the balance imbalance on 30 minutes as well, and you see it is above the blue levels. So I'm looking at, the possibility is now biasing towards the short side. So we have already qualified this. Now we're going to travel down. On 22nd, this is a very interesting phenomena. On 22nd, you can see that we also have our oscillator, which is telling us we are in an overbought situation. But we also have one more interesting automation here called dot circle timer. Now that is automatically posting all the vertical energy hotspot turning times. That came along right here at the same time. And then we have our own 15 minutes harmonic energy levels. So a lot of things have come together at this point to give us a potential short bias. And this is how you can drive from a higher time frame to intermediate time frame to smaller time frame. Now we are set to execute our shot. Another pattern of interest which we should be aware of is after the initial impulse, when we have a pullback and market is going sideways, which it does, when you make a new breakout of the pivot, blows up, settles down, pulls back, we are looking to go long again. And that is one of the very strong patterns. And looking at the contract rotation phenomena, we have Bollinger Band squeezing and then contract, although it is not at below zero, close to zero, it is on the lower side, but there is no evidence of any specific direction from this. I want in this balance imbalance conditional oscillator to have all things jammed onto one side right here, fully compression, all compression, all compression, all compression. That's what we need to see, that all these four lines are compressed and not spread out. Here. Now we have not added our C54 levels, banking levels, or other phenomena. We have around 22 tools in level 1 and 2, and they can pick up any kind of market condition very effectively. So this pattern is something you need to really pay attention. We have impulse, pullback, sideways, blowout. All right. So I hope you can learn from it based on your own trading. Now once this happens, right, we took profit of this scenario, and now I am looking for another terminating point. Again, I'm looking for impulsive market moves, and here's the one. So market is going sideways. I see big break. So this strong break happened here in this bar, right? See this boom. You have to this tool has to be moved bar by bar at the top or the bottom. So here, as I said again, market is going sideways. You can take this one as well initially. And this one, you were waiting for this guy. Now market is strong, market is bullish. So now this has to be used in, this is where it becomes a little tricky, With experience, you can take care of that. But if I go back to this 23rd, you see this one is telling us to go long, okay, and there's no evidence of going long and short. The way I like to be above the blue, below the blue, it is middle, it is in balanced location, so not giving us any evidence. Contracts are moving up, that's the only evidence we got. No evidence from here. The only trading evidence we have to go long is this oscillator. But the question becomes, if we know our trending mode is bullish, who is in control? We cannot teach you in public in a lot of complex details, but we can look at this chart pattern. Market is under the bullish control. If market is in the bullish control, we are looking to pull back into our levels so we can go long. That's our first fundamental principle we teach, what we call as banking bars. So you need to understand which mode and which side is controlling a market in a given swing situation. So right now market is still in a bullish mode. We got this bar broke the tops of these and closed higher. First impulse move, I place it here. Reversal is expected to be here. Pullback is going to be these levels. All right. And okay, so if I'm going long, I don't want to be looking for taking shots at this point, but I'm also looking for a little bit even bigger, stronger uptrending bars. I need to have some pullback. So here we had this very strong bar after the first impulse move. So let's put it at the bar, at this bar. Strong impulse, right? Strongest bar, as we have discussed. So now this gives us a structure of final termination. And this is the final termination. Now it doesn't mean it will happen the same day. It can take few days to get there. It's like we have Sunday open, right? And there we go. And the market gets to this location, takes it downward turn. But it takes around 2.5 days to get there. All right. And this is how we want to drive the market. Now market has rolled back down here. What we're going to do, we're going to do the same thing on the opposite side. We're going to locate impulse entries for the termination points. This is a huge impulse bar. This was the initial impulse bar. So we'll use it at this location. And we say market is going into this zone. And from here it goes up. And then it comes down. While coming down, we create this huge next impulse bar. We locate it at this location. We get our next termination points. Now we are in this zone of termination reversal. We see that we have additional help. I'm still locating at looking at 65-minute chart, the trading biases. All right. Okay, so let's just analyze this situation from today. Now, as I said, we roll down to the next chart here. Everything you see is fully automatically placed once you have this setup done. So now we have this roll down into this location. Look at this. Now we are off the blue zone. Blue on the top, blue on the bottom. We have blue on through it. Everything is compressed. So this gives me a first level of confidence and level that, hey, this is high potential that we can go long. If it keeps going, no worries. I'm going to put a limit order here. I will be just putting a buy order here. It pulls me in, pulls me in. If it goes down further, right, our zone is pretty large. As you can see, it could have gone here or here, still being in the zone. So we have to let it go and pull us in. Now there's a lot more other things going on. Why? Now this was an evidence for us to trust it. And then on this side of the equation, again, we have this circle reversals right here, dotted circle reversals, fully automatically placed, and they get reset every day after midnight. So this dot circle timer is a fascinating tool set, and it works. It doesn't work with respect to any bindings it has with the market itself. It is working independent of the market binding, which means this time is time, and this time is critical, and it's critical for all the markets. For example, Nasdaq, YMES, the markets of typical interest. Now once we have this timing set up in stage, we are going to wait for it to prove itself. So location is set up from higher time frames, from 65 minutes to 29 minutes to 15 minutes. Energy has come. We can put a buy order here, right? The better option is just like this is all typical functional trading methods. Always wait for, maybe you can use Gann 45 degrees right here, or you can do a natural degrees, which is what we call as trend lines. This is one trend line, and the way we like to use trend lines, let it break, let it come back to retest the trend line on the other side. Stop loss is going to be here. We can add on here, and off you go. Exit here, exit here, exit here. Trail and other natural phenomena. So I hope this makes sense how you can put together multi-time frames phenomena. Now this 29-minute chart is not going to be starved by us by limiting it to just use these two tools. We can also use Mandala here as well. We have other very sophisticated tools to pinpoint what's going on. So let's keep it simple and see if we had this day's Mandala also giving us reversal at this point. So we're going to drop this single bar Mandala tool. It gets activated. I'll just drop it initially here, and again the rules are not different. We're going to look at the impulse bar. It's very large. Okay, so now the termination points for a very large point. Let me remove these yellow lines. So if I put it on a very large bar, it may not reach here. It could, so I just mark it. If it gets here, I am interested, and I know I typically mark these vertically close to the lines right here, so I know that these markings are coming from, if I look up from this big bar, because I always use big bars. At the same time, I can say, why don't we use other ones, any other big bars? This is another huge bar. If I put this huge bar, the blaster of Mandala is going to be ending here, and I mark it. Then I'll wait for the market to come close to these ranges and take assertive actions. And nobody's stopping us to putting Mandala on the 15-minute chart. Now you see what I'm doing. I'm going and repeating I'm just getting into the structural phenomena, how the market is rotating across various time and various structures, applying the same tools and same methodologies. So let me put mandala as well. On this chart. So I drop this tool here as well. And if I do it properly, there it is, right? So I have gone through the same tool. Just single tool out of 22 tools to define the structure at 3 different time frames and coming with the target zones of reversal. And on the 15-minute chart, I've also placed the timing tool with market is going to turn. And what I see here, I have a super location of time and price coming together, and we do extra confirmation as I noted earlier through maybe trend line breaks as well. And there it is. Now what do we do with this 2-minute chart? Well, let's keep that focus. Now this is only showing the New York time for a reason, and let's say we just put the mandala here as well. Since we already know from the higher time frames that this is a bullish market, the buyers are in control, looking at this chart, and we're looking for pullbacks, we're looking for reversals. Well, let's put mandala here as well. So when the market opens, I see a big impulse move down, boom, I just put it right there. On the downside move, or this one is a big one as well, right? So I just put it initially, market is going up and down, right, for sideways for a while. I put on the top right here. If I put it on this big impulse bar, the pullback is, let's mark it right here. We teach all this in detail along with the tool set in a very extensive 90-day program, but that is for people who want to be real pros for multi-generation. So right now this big impulse move is reflecting on this guy, right? Reflections. If I move it on the top, I see the same reflection points here, right? So this is how I have plotted all my structures. Now it's a matter of execution. So why we are going through all this? We want to make sure all the waves from all the structures, from all the time frames are converging into singularity. And so we can take the energy blaster and take a bias. And we enter here. Now it's a matter of using auto bots, auto trades, or manual trades. We can just tell the bot also to just take this long direction only. So when the structure comes into picture, it will take long.